and have talked, among other things, about the huge cultural shift it is to bring someone in from the outside.
Yeah, I think that's a key point. And as chairman and CEO, interestingly as well, Mr. Culp taking that job. He has been on the board, not for that long, but he did sign off on that plan that was announced in late June, of course, to separate out healthcare and eventually sell down the stake in Baker Hughes, a GE company. It will be interesting to see. He doesn't even have an office yet. He's just getting there, just sitting down, just trying to figure things out. As we've been saying sort of this morning, the board seemed to be frustrated by the pace of decision-making by Mr. Flannery. You can see, of course, a very positive response thus far to this move from investors this morning, but we'll see how things open. I've been hearing, and I know Jim just told Joe something a bit different, but I've been hearing, Jim, that they're going to stick with the plan. Culp had signed off on it. Horton had signed off on it to jettison or separate healthcare. It's just the speed at which they want to get this done that really was at issue, and they're going to move more quickly. $23 billion impairment charge. I'm told a majority of that is from the Alstom acquisition.
Yes.
And finally, we got to keep an eye on the dividend because that's got to have some issues.
Well, remember, it had issues even with the spinoff because they were going to give it to healthcare, split some there. But I think that he's telling people, Culp is telling big accounts right now, don't think that we're just going to put that plan in place. Okay. We've got much more that we wanted to. Remember, he was remarkable at Danaher, 5 times the S&P. It was always thought that he was looking over the shoulder of Flannery. Nelson Peltz told me this morning that the decision is super. I know that they had Trian had a man on the board.
Well, they do. Ed Garden's on the board.
And they were thrilled about this.
Try to reach Mr. Garden. He hasn't responded.
But look, I think that John Flannery, let's not forget, he was given a really bad hand. And the hand was far worse than people realized, whether it be power, where the orders were far lower, whether it's, frankly, I mean, other than aerospace, everything. Well, I guess healthcare was okay.
Healthcare was okay. And that was, of course, the division he'd run. Now, don't forget, he was involved in the Alstom acquisition.
No, everything.
Even though that was under Immelt.
No, I think that he was tainted. He was tainted because he did check off on that. And that was probably one of the most suboptimal decisions that a company could make buying.
One of the knee-jerk discussions this morning was whether this turbine issue was a tipping point. Or do we know more on that?
Well, look,
how much of that?
There were a lot of tipping points. I mean, you had the long-term care tipping point where John was not aware how big it was. You had power. You started seeing Siemens take share. Don't forget, we had the last incident was the TUSA news break about the blades.
But Carl, I don't know.
Yeah.
I have not heard that it was specific to that as much as it's continued underperformance of the unit.
Oh, boy,
the big write-down, of course, again, a lot of it, though, due to goodwill from the Alstom acquisition, which was clearly yet another, the final poor deal that was done under the regime of Mr. Immelt, as we pointed out so often. So many deals done at the top end or selling at the bottom. It adds up when you do it over and over and over.
Are you surprised that Danaher's Culp, what he was, is back? I always thought it was interesting that Danaher, the current version, under Joyce, wanted to buy the healthcare business at a but I think it's going to look like a low price.
No, I think the minute Culp joined, it's funny, when I looked at his age, 55, he was like, wait a second, he's only 55, he ran Danaher for 14 years, and you can take a look, by the way, you want to see why GE stock is up this morning? Take a look at a 10-year chart of Danaher, and you'll get some feel for it. Even though, again, he has not been running the company for 3 or 4 years.
Very